Hello everybody and welcome to a new valuation video, the most undervalued stocks in my coverage universe. I've updated this spreadsheet as of Friday, February 17th at around 1 p.m. Eastern trading time. So hopefully this is helpful for everyone as we head into next week. So some changes to the valuations, but not many today. What I've changed in the spreadsheet is I've added two stocks to the spreadsheet that I'm watching. Two stocks that that are on my watch list, which are Etsy and Fiverr. I do not own these stocks yet. All of these other stocks in the spreadsheet have been a topic of a full, in-depth, qualitative analysis video on my channel, and I have done my due diligence in all of these stocks, and I have a credible commitment to all of these stocks because I own them all in my personal portfolio, but not Etsy and Fiverr. They are simply on my watch list, although I already have an analysis for Fiverr. So let's go with the update. Which are the most undervalued growth stocks in my view, in the way that I value stocks? And as a reminder, I value stocks looking at enterprise value over gross profit over revenue growth, right? Upcoming next year, next 4-quarter revenue growth. And that is a variation of the PEG ratio of Peter Lynch. I use enterprise value instead of market cap, right? Because enterprise value takes into account debt and punishes companies that have debt. I use gross profit because I invest in hyper growth stocks, which means that my stocks are mostly optimized for gross profit. They're not optimized for earnings yet. And then I use revenue growth because I want to know how much I'm paying for each percentage of growth, how expensive that growth is in the short run. Knowing that this valuation tool is really only helpful if you're trying to look at what's going on within a year, within the next 12 months. This is not helpful if you are a very long-term investor and you're looking at the terminal revenue value, right? The only thing that matters when you do discounted cash flow analysis, when you look at a long-term investments, it's what's going to be the revenue in 2030. That's what should matter, but it's much harder to predict. It's much harder to predict what revenue is going to be in 2030, and it's fairly easier to look at what revenue is going to be over the next year, over the next 4 quarters, which is why I do these undervalued, overvalued growth stock video where I compare stocks. So based on the potential of these companies over the next 12 months, this is what I come up with the least expensive stocks right now, the least expensive hyper growth stocks. StoneCo is the cheapest. Right, you're paying next to nothing for growth at StoneCo. This stock has been trading at the bottom for more than a year. Everybody's forgotten about the stock. And HIMS is the second cheapest. HIMS is still ranking really, really well, despite the 40% run up that it's had over the past few months. Teladoc, Teladoc has been sold off, and everybody forgot about Teladoc, even though we are returning to growth at 35% over the next 4 quarters. Pubmatic, that's a small cap stock in the ad tech space, and MercadoLibre. MercadoLibre is slowly becoming one of my favorite positions right now, ever since their competitor went out of business in Brazil. So I'm very bullish on these companies. My smallest position in there is Pubmatic because it's a very, very small stock, more speculative, but HIMS, StoneCo, Teladoc a little less as well, and MercadoLibre. HIMS and MercadoLibre and StoneCo are stocks that I'm very, very bullish on. Special mention for Nubank, SoFi, and Fiverr. They are very, very close, all 3 of them, and they are very inexpensive, all 3 of them. And I own SoFi and Nubank. I do not own Fiverr. It's on my watch list. Let me go through each of these megatrends, right? As you know, if you watch my channel, I invest in megatrends. So the first megatrend that I invest in is Tesla and Enphase. I like to have a pair of stocks within a megatrend as much as I can. Energy revolution, I see a pair between Tesla and Enphase. Right now, Enphase is the cheaper buy, but Tesla has so much potential that I am not willing to sell Tesla. And I actually keep accumulating both stocks right now. Then, between HIMS and Teladoc, I am clearly accumulating much more HIMS than I am Teladoc, mostly because Teladoc is a holder position. that I've had for a longer while. Teladoc is more a long-term play, really insurance space, right? They use insurance. HIMS, I think one of the HIMS selling point is that they don't use insurance to sell their products, which is why it puts them more in the preventative healthcare as opposed to Teladoc, which is more the reactive healthcare when you have an issue, and the digitalization of the traditional legacy healthcare is Teladoc. HIMS is really something new. It's a new type of business in my view. Love HIMS. I think it's a great business. Moving on to data warehouses, data monitoring, and overall data SaaS stocks. So we've had a little change. Datadog got a little cheaper. MongoDB has not reported earnings, and Snow has not either. The major change in my view right now is that Palantir has given very, very, very poor guidance. And I am not sure that Palantir is sandbagging its guidance. DDOG, I'm pretty certain they're sandbagging. They have a strong history of sandbagging. Palantir doesn't have a history of sandbagging guidance. Palantir doesn't have a history of raising guidance. So I am getting, a little concerned about Palantir's valuation. I think Palantir is getting pretty expensive. In my view, Palantir right now, the more compelling part of Palantir is the military play, is the fourth contractor of the security, the military industrial complex. I think that's a big reason for owning Palantir right now. Otherwise, I find the stock a little expensive. DDOG I find very cheap, and so do I find MongoDB. So I would be more inclined to trimming a little bit of Palantir right now to add to other stocks in a related space. Palantir's prime time, in my view, has not come yet. Right now, the prime time is for Snowflake. It's the era of dashboards. We're in the era of dashboards. We're in the era of business intelligence. We're not the era of data apps just yet, in my view. Moving on to other stocks I own. Cybersecurity, right? Big reason why I own cybersecurity is we have some resilience. That's probably the last thing that businesses are cutting, cybersecurity. There is a clear, low-cost, cheap, inexpensive price right now. Leader is this CrowdStrike. CrowdStrike is the least expensive cybersecurity stock in my view. You're not paying up that much for that growth. Zscaler is a lot more expensive right now. I'm not adding to my Zscaler position. I'm not adding to my Cloudflare position either. I'm very interested as to the dynamics between Cloudflare and Zscaler because and Palo Alto Network too. A lot of companies are going after Zscaler's business. They're still the leader, but a lot of companies are claiming they're better than Zscaler, and so I'm curious to see what's going on. CrowdStrike, I'm very confident in endpoint security. It's a space that I like to be invested in. Cybersecurity is, it's the security of the future. It's where the whole field of security is headed. Then e-commerce, right? We can't forget about the mega trend of e-commerce, but Amazon's too big, and Amazon is mostly a play on SaaS these days. It's mostly a play on the cloud, on all of these SaaS software building on infrastructure as a service, the IaaS that Amazon is doing. So Amazon is a tough company to analyze because to me, Amazon is mostly a cloud computing play at this point. There's two companies that I find very compelling in e-commerce. It is Shopify and MercadoLibre. Shopify, I am not worried about the long-term thesis of Shopify. I think they have a wonderful positioning. Almost 10% of e-commerce in the US is on Shopify. The problem, my view, is right now, Shopify is highly, highly valued. So what I'm doing right now is I am trimming some Shopify and add it to MercadoLibre. I do not understand why MercadoLibre is so cheap. Yes, it is a Brazilian company, but it is the highest Brazilian company in its space. They are the leader in the space, and their main competitor just went bankrupt. The market got news of that. MercadoLibre went up for like a few days, and then it went right back down, as if that great news didn't happen. So I'm very bullish on MercadoLibre. Plus, they still have outstanding 50% growth. I think they can continue to have that growth going forward, setting itself up, I believe, for a good investment. No investment advice, of course. Moving on. Payments. So my payment stocks right now, there is a clear winner, and it is yet again a Brazilian stock. It is StoneCo. StoneCo is the cheapest stock in my whole coverage universe. They're still growing at 50+% revenue quarter over quarter, and the stock is still way down. StoneCo is owned by Cathie Wood, owned by Warren Buffett. The stock crashed in late 2021 because they had an issue with collateral. They've took a big loss. They've moved on. The issue is not a problem anymore to StoneCo, but StoneCo is not on any company's radar. It's like StoneCo has fallen off the radar of everybody else, even though they had a legitimate issue, which they fixed. The stock's crashed, but the stock is not recovering at all. So I'm happy to be accumulating StoneCo because I believe at some point the market will catch on to the fact that the issue why the stock sold off in the first place, that issue is gone now. There's no more collateral issue. This stock is trading way too cheap in my view. Square is also trading pretty inexpensively, especially when you consider their positioning in the closed loop payment market in the United States. DLocal, I'm not doing anything on that stock right now. I am waiting to see what is going to happen with that short seller report. They are under attack by a short seller. I was much more bullish before that short seller report came against DLocal, and I'm waiting to see. I'm waiting mostly for it to get back to the level that it used to be trading prior to the short report, and then I will evaluate. Good thing for DLocal going on right now is they did a share buyback, a repurchase buyback to show their conviction against what the short seller was saying, but DLocal now is a battleground stock because of that short seller. I'm sad. I'm a little pissed about this happening, but it's Wall Street. It's the way it is. A lot of Latin American companies get attacked by short sellers more often than a lot of other companies. So that's a risk to take into account. Moving on, AMD plus Nvidia. So AMD reported its earnings recently. Great earnings. But the guidance went way down. They guided way down on revenue growth. Analysts got their prediction for revenue growth way down, which means that now AMD is actually much more expensive. AMD is not a top stock compared to a week ago because of that updated guidance, to 2 weeks ago, compared to that updated guidance. So I'm buying less of AMD. Nvidia, though, is it's the most overvalued stock in all of the stocks I follow, and in my opinion, it's getting very, very heavily valued. Yes, Nvidia is the leader, uncontested leader in GPUs and in the GPU market, and GPUs are fundamental to artificial intelligence. But we're going through AI hype right now, and the market agrees with me. Like we all know that GPUs are essential to AI, and so the market discovery makes it so that everybody has discovered Nvidia and paying up a premium for Nvidia. If I were interested in adding to my chip stocks right now, I would be adding to AMD. I would not be adding to Nvidia. I am not selling Nvidia either. I'm not trimming Nvidia mostly because capital gains, and I think it's a long-term hold, and I'm up on the stock, so I don't want to sell Nvidia for that reason. Let me move on to ad tech. So ad tech companies, I think this is a special situation. The Trade Desk, great execution. They reported great execution, great numbers. Stock shot up. So now Trade Desk is getting expensive. You're starting to pay up a lot more for the growth in Trade Desk that you used to pay up just a month ago. And what I'm considering doing is trimming some Trade Desk to actually put it into Google. Even though Google does not fit my criteria of a hypergrowth stock, it is, I believe, a stock that now is being unfairly punished by the market. Just like if you remember Facebook, about 5 months ago, Facebook was unfairly punished by the market and shot back up 70 or 80%. I feel like Google right now, because of their AI, board fiasco that they have with their AI giving mistakes, I think the stock is being sold off, and it's in the same space, right? Google is the leader in ad technology, so I'm considering trimming a little Trade Desk for Google. The reason why I'm not adding to Pubmatic is because it's a very small position, and I'm in a wait and see approach for Pubmatic. But Pubmatic, we can't deny that it's extremely cheap, but I'm comfortable with my position sizing on Pubmatic. I think Pubmatic is more of a speculative stock and deserves a very small position in the portfolio because you never know. They have a vulnerable positioning in my view. I will make a full video on Pubmatic. That's one of the stuff that I still haven't covered on the channel. Let me move on to Nubank and SoFi. So frankly, this is a tie right here. as far as paying for growth, they're about the same price. You're paying about the same price. Now, Nubank is actually, growing twice as fast as SoFi, but since you're paying the same price per percentage of growth, this is a little bit the same situation as HIMS and Teladoc. HIMS is going twice as fast as Teladoc, but Teladoc is so cheap that it makes up for the relative overpricing of HIMS. Kind of the same way here. Frankly, I own more SoFi because I have an understanding of the US market. I don't have an understanding of the Brazilian market as strong as I have of the US market. That's kind of a reason why I own SoFi, but I am looking to add some money to Nubank. However, it wouldn't be done by selling SoFi, right? That would be new money that goes into the portfolio. I think Nubank reported outstanding earnings. Lastly, let me conclude with platforms. So Airbnb is the only stock out of these three that I own. Airbnb reported outstanding quarter, great execution, a lot of the fear, a lot of the buzz against Airbnb online, a lot of the buzz against the cleaning fees, etc. Don't change the rationale for Airbnb. If you're traveling as a family, Airbnb is going to be a best cost provider for you. Airbnb is going to be the best bang for your buck, I think their scale is tremendous, and they could grow to much bigger scale. I happen to believe they have a much larger total addressable market than most people think. I'm happy to own Airbnb. I am not heading to Airbnb because there's much better opportunities right now, but I own it, and I look at dips, and if it dips, I would buy Airbnb. Etsy, I have to cover on the channel. I will shortly. Fiverr, I have covered recently. Fiverr and Etsy are both on my shortlist. I believe these are interesting platforms. Platforms are obviously a mega trend. A lot of the old ways of doing business within your intermediaries is getting disintermediated and operated by neutral playing ground type of platforms. And Fiverr is a neutral playing ground for exchanging freelance work and tasks. Etsy is a neutral playing ground for exchanging crafts mostly and vintage stuff. Airbnb is a neutral playing ground for anybody looking to host people. I think platforms have a lot to say. They always win. Platforms always win, and they benefit from competition among the people registered to the platform. So I love platforms, and this is why I have platforms in one of the many mega trends that I invest in on this channel. This is not investment advice. This is obviously just my views on relative valuation within a year. I really hope you liked the video. Not investment advice, just entertainment. Appreciate any like I can get. It really helps YouTube, and it motivates me to make more videos. And I appreciate if you can subscribe. Thank you so much, and have a wonderful day.